right, good afternoon, everybody. Thanks for joining us today on the topic of 3 insurance strategies for helping cash flow. When we face business disruption, controlling costs is critical, right? We're going to focus on ways how to reduce your insurance costs today. As you've heard, a popular saying, cash is king. It's never been more true than right now. So, such expenses, you can do a few things with expenses. You can eliminate them, you can modify them, or continue. You have to pay certain expenses. So we're gonna walk through those, and many of these can be deferred as well. So some expenses that can be eliminated: payroll, right? A lot of people are laying off staff, they're furloughing staff, or they're reducing hours. That immediately eliminates that cost. If you have a location that you aren't currently using, office space, warehouses, manufacturing plants, the cleaning and waste pickup for those sites, you no longer have to pay for that. And cost of goods sold, so inventory or raw materials, back to those manufacturers, right? If they're not making any goods, they don't have to buy any raw material to make those goods. So those expenses can be eliminated. Some expenses can be modified. So here, your insurance, and we're going to discuss some ways you can lower those costs. Contracted services, if you're not using certain services as much, they can be modified. And rent, for example, we know many people either renegotiating their lease or their rent, or working with their landlord directly on some payment plans. And then finally, some expenses will continue. You may not be able to eliminate them completely or modify them, such as mortgage payments or real estate taxes. However, there's a lot of flexibility, so you want to look at that stuff. So insurance expenses can be deferred and eliminated. So here for general liability, some of the industries we're talking about: contractors, manufacturers, restaurants, daycares, landscapers. Okay. So on the general liability, this tactic, when rated based on gross revenue or payroll. So the liability looks at what's your estimated gross revenue or what's your payroll. Those can be modified down to assist in lowering the cost midterm. If you have an annual audit every year, that's what we're speaking to, right? Every year they ask you, has your gross revenue reflected what you estimated or what we estimated, and has your payroll, and then your premium changes up or down. You can do that midterm right now with most companies.
Yeah, and I'll just jump in. That means you don't have to wait for the audit. If you know your revenues are, if it's based on revenues or whether it's based on payroll, if you know those are going to be down over the next 12 months, gosh, you should make an adjustment immediately, and the effect on the insurance is immediate. So,
good point. Thanks, Jeff. Another metric that recognizes the level of activity to calculate that is, food sales and alcohol sales for restaurants. Everyone knows restaurants are getting hammered because they can't have the alcohol sales, which drives 70% of their revenue. So they can eliminate those right away. Units sold for certain manufacturing operations. We just discussed the cost of raw goods versus the goods you're producing and pushing out. And then subcontractor costs. So contractors on a job site. For contractors, if they're not out there on the job sites and they don't have the work that they typically have, they're not using those sub costs. So they can lower those right away with their insurance company and save premium. All right, this is the rating page in your policy. So I don't want you to get glossed over and say, wow, this thing's too much to handle. We just want to let you know you can find it in your policy. And it's really for us to focus on, but just knowing that it's there if you want to see it. But I'm going to walk through some of the numbers and how you can save some money. All right, so we have some boxes up on the screen focusing on that page, okay? So the highlighted premiums we have are roughly $281,000 of payroll for this client. That's roughly 4 people making $70,000 each, okay? And then the second one below is their sub costs. Right now they have $2.9 million in total costs. And as you can see, that is making roughly $15,000 in premium for those rating factors. So what we can do, we can modify those right now. And this is how this happens and kind of how you can save money. So the effects of modifications are endorsing the policy, as we would call it in the insurance industry. So one person furloughed on the payroll side, you can go from $280,000 to $210,000 in payroll right away, which would lower your premium from $11,000 to $8,000. On the sub costs, you know, right now your sub costs go down 30%. So from $2.9 million in sub costs down to $2 million in sub costs. That's going to lower that rate right away for a savings of about $4,000. So the kind of the general math behind it, you know, just to make it easy, payroll was $280,000. You know, once again, the 4 people making $70,000 each. One is furloughed, reducing the payroll to $210,000 for the year. You get the savings right away. And then the cost of your subcontractors was roughly $3 million. But, you know, assuming in April, May, and June, you know, you don't do anything, you can reduce the cost of your subs down to $2 million, which saves $1,100 right away. So the savings are there for these types of clients.
Oh, actually, and if I may just jump in for a moment, sort of a corollary to the cost of goods sold, if you've got an operation where you know, you're burning through existing inventory and not buying new stuff, you know, new inventory for your whatever you might make or improve on, that's also property insurance, different from general liability. Again, so if you have $1 million of inventory and you've drained that down, let's say to $500,000, make an adjustment to get it to $500,000. You can always raise it back when things are better, but it's kind of a corollary to the GL, and it's not necessarily as big an effect, but it's there as well. So just again, these all add up. So go ahead, Val.
Yeah, good point, Jeff. The next type of policy or insurance coverage that we're going to focus on is workers' compensation. You know, we treat this as a labor tax, right? It's based on your payroll. So if you're furloughing people, if you're laying people off, people are working less hours, that should be reflected right away in modifications to your workers' comp. So what does your current and future payroll costs look like? And here's another example that we're going to use from a client. And once again, this is a page in your policy, but we don't want you to get, you know, overly confused by it. Just we want to show you that it's there and what the numbers that we focus on look like. So it's a typical workers' comp rating page for a small machine repair shop. So we have 7 mechanics making about $50,000 each. This particular account has a rough claims experience. So you're going to see that they have what we call an experience modification, which is basically a surcharge for their claims. So if 2 guys are furloughed, we can adjust the annual payroll down by $100,000. So from $361,000 at the top of the screen down to $261,000 below it, and the correlating premium to the right there. Also, if you factor in the experience modification, or really their negative claims history, they're actually paying much more. It's almost like a rating multiple because they have that negative claims experience. So for an unmodified policy, Jeff, you can go to the next page, the effect is about $5,000. So the payroll was $361,000. You know, 2 are furloughed, you reduce the payroll to $261,000 for the year. For an unmodified policy, meaning they don't have any, you know, negative rating history, the effect is $5,000 in savings, you know, right away. For this company, with their negative claims history, it actually works out to $8,000 a year. So instantly that billing relief is there. So the next page here is on auto insurance. So I just want to preface this with, you know, this is heavily regulated. So the Massachusetts Division of Insurance and the Registry of Motor Vehicles are making this hard, but we don't want you to ignore it. So your auto insurance is rated based on the vehicles driven. However, if you're not, you know, for let's say a fleet, if you're not using 3 or 4 vehicles, you don't want to pay the insurance for those. However, back to the regulatory piece, the RMV requires all active license plates to have insurance and show that proof of insurance. So it's something we're working through. We can't promise that we'll be able to take your cars off the road without canceling the plates, but you should be having the conversation with your broker, and they should be speaking with the respective insurance carrier that, you know, writes your auto insurance to see if there's a way they can take those auto premium off for the vehicles that aren't being used. So on the next page here, we show you of a wholesale operator, right, or wholesaler operation. Typically, lots of delivery trucks, box trucks, vehicles of different sizes. If we take, so you can see that their total cost for the year is $66,000 on roughly 20 vehicles. If we take 9 of these vehicles off, right, and we don't cancel the plates, the insurance company allows us to just take the premium off the policy because the trucks are sitting in the lot at the factory. If we take 9 off, we can have a savings of $27,000. Sure, you know, and you can see the numbers there at the bottom, $27,000. Sure, you know, if they come back in 3 months and put them back on, you know, 20,000 of that premium will come back. But it's nice to have the $27,000 in billing pressure, you know, alleviated right now on the client. And then for the math behind that, 22 vehicles insured for 66,000. Like I mentioned, we take 9 off. It will leave 13 vehicles. So for 39,000, that $27,000 in savings. And then, like I spoke about, it will be prorated. So, you know, if you're halfway through the policy or closer to the end, it may be less in savings, and it will be prorated. But this is the conversation you should be having with your broker and your insurance company right now. So, like we keep on saying, cash is king, right? You need to speak to the billing departments directly, or our clients need to be speaking with billing departments, and we are speaking with billing departments. You cannot expect your insurance company to reach out to you and offer billing relief on business insurance. They're just not doing it. You need to be asking your broker. Your broker needs to be working on your behalf, and you need to go to the insurance companies directly and say, what can you do for us on our bill right now? You want to reconcile any guesswork at the audit, right? So after the policy year is over and cash flow might not be as tight, so when you're making modifications now to your payroll and your gross revenue, you know, just do the best you can. Eliminate and reducing your costs. So general liability based on reduced operations, your workers' comp based on reduced payroll, auto fleet based on vehicles not being used. You can eliminate those costs right now. And then, so, you know, a few comments on business interruption. You know, we're not lawyers, so we're not sure how this is going to play out in terms of contract language, policy language, exclusions. However, what we can say is the insurance industry has been around for centuries. They've seen pandemics. You know, policy language is designed to avoid the cost of pandemics and is reflected in the pricing. So, you know, you'll hear people say direct physical loss or the coverage needs to be triggered. So the COVID-19 needs to be basically found in the building for it to apply. But the virus, bacteria, and fungus exclusions otherwise wipe out the coverage, in our opinion. However,
I'm gonna just jump in for, actually, yeah, you've got it, Val. Sorry, I was gonna, go ahead.
However, not all companies include these exclusions, okay? So we've heard of some Lloyd's policies that don't have that exclusion, and some other surplus markets, meaning not your standard markets that you see commercials for on TVs or companies that we'd like to place you with kind of off the shelf. You need to talk to your agent about this stuff. However, as you know, we discussed with many of you and our networking colleagues, lawyers and legislators are probing, and they're also posturing, right, on where their position is going to lie. California and Florida, restaurants, multiple lawsuits filed. Massachusetts, legislation filed. You know, Article 1, impairment of contract rights. However, the reality is insurance companies have experienced quantifying business interruption losses for years. So we do feel if the government was to back insurance companies, just like they used banks for the PPP, right? If they backed insurance companies, the insurance industry would be best to handle business interruption claims because they know how to handle those and they have experience in it. So we feel it would be best for the insurance industry to help out. However, there's a lot of bureaucracy and lawsuits to kind of, you know, work themselves out before we know what's going to happen. But we are optimistic at this point that's, you know, some of our clients will have some coverage retroactively, but we simply, you know, can't bank on it. And then, you know, one last thing, you know, always a hot topic, but especially now with everyone basically fleeing their office and fleeing their workplaces with their computers, their cell phones, and working from home. The risks of working from home and, bring your own device are, astronomical, right? So how well prepared were you for sending everyone home? Did you have a plan? Was it careful? Was it deliberate? Or was it fast and furious? Or likely was it somewhere in between? And then again, on your smartphones and emails, how careful is every employee with their browsing? How is your email safety procedure? Are people accessing corporate databases from home? Do you have a wall protecting your data from your employees at home and the scammers out there trying to penetrate that? Email scams are up. They're way up. You probably have all seen an email or two, or even a phone call at this point, trying to trick you, gotcha into giving out information or access to your database. So you want to talk to your IT partner to make sure that everything's up to snuff. You want to talk to us about what coverage you already have in place. And if you don't, you want to consider adding cyber liability. And so at this point, we will open it up for any questions. If anyone has any specific questions or any general questions, we can certainly answer them or open up a discussion. Jeff, I know you mentioned that we had some good questions yesterday. One was the question on the workers' comp and the PPP.
Oh, yeah. Thank you, Val. Yeah. A fellow yesterday had said, well, we got our PPP money, and so we're good. We're not going to reduce our payroll for the next 60 days because, we got money, the money that dropped out of helicopters. But beyond the 60 days. So the question is, well, in 60 days, will we just flip a light switch and have the economy be back to where it was pre, March 1st? And so that actually, the point being that 2 months is nice and it's good, but do you still project a decrease in payroll, over the next 12 months prospectively, looking forward? And then it's like, yeah, actually, once we're done with the PPP money, yeah, we're still going to probably be laying some people off because business, most people are in agreement. It's not going to be a V-shaped recovery. It's going to be maybe like a University of Florida, kind of a U-shaped. So in any case, point is we don't know. But if you overestimate the decrease in payroll going forward, remember, the insurance company is going to pick it up on audit. But if it's more important to get some cash flow pressure off today, that's how you do it. Just understand that the bill is going to come due if you overestimate the decrease, right? Or if you estimate that it's much higher than it really is. So just something to pay attention to, be careful of, but utilize it because cash is king.
Yeah, and then the last thing to stress about too is, and I mentioned in the slides, do not wait for your insurance company to reach out to you for these items. They're not going to do it. You have to be proactive with your agent and your broker in identifying what changes have been made to your gross estimated revenue, your payroll, your subcontractor costs, and you have to bring those changes directly to your insurance company, as well as billing issues. Cash is king. If you're having cash flow problems, you need to address those with the insurance company and the billing department. They're not going to reach out and ask you how you're doing. You need to go to them and say, what can you do for us?
Right. Yeah, that's basically what we've been reaching out to all of our commercial accounts and just saying, how's it look and what can we do? But I think we're a little ahead of a lot of our peers. That's just the sense we're getting. So anyway.
Well, thank you for everyone for joining us today. If you have any questions about your own company's insurance program, please give us a call or shoot us an email. Our phone number at the office is 781-659-2262. My personal email is val@agordon.com. We'd be happy to discuss your current situation and what we can do to assist you.
Okay, great.
Thank you.
Thanks.